Hey everyone, Rogue Traders here. Shane Oglow, Richard Hodges. So we had a little bit of an event. So we're creating a little special little video here. Last night, as you probably know, if you're paying attention, the markets had a bit of a dump, a bit of a dramatic move. Certainly not the most dramatic they've ever had, but given not a lot has happened in the last couple of months, it was a big event. And as always, the downside is always a little bit more dramatic than when we get up moves. So the question is did you profit from it? Did it cause you pain? Did you lose money from it? So we're going to talk a little bit about that because we've been preaching for weeks how we've been preparing for this. Now, we didn't know it was going to go down. We had our inclinations, but we're prepared for either way. We're also prepared for it to keep going sideways for another month or two because it's the market. No one knows what the hell is going to happen. But why don't we just sort of dive in? There's been a lot of talk about what happened. And at the end of the day, it doesn't matter why, what the catalyst was. Who cares? These things are just going to happen. But there are some rumors floating out around there about why the market crashed.
Yeah. So the two things I've seen in Reddit are Evergrande filing for bankruptcy in China and SpaceX selling Bitcoin. Both of these are actually bullshit. So Evergrande has been known to be bankrupt for at least a year, if not more. And we all know that China is bankrupt anyway. So it doesn't really matter what the biggest business in China is doing. The entire economy is going down the toilet. So that's old news. And SpaceX didn't actually sell Bitcoin. They actually, it's an accounting exercise to remark the value for their accounts. So they marked it down, or they wrote down the value of their Bitcoin holdings, but they didn't actually sell any. So there's no obvious culprit in the markets at the moment. If anything, I can share my screen actually.
Sure. Well, and the markets have felt heavy for a good month, and that's why we were kind of slightly inclined to think it was going to go down.
Yeah, I mean, to you and me, I think it did. I think a lot of other people were quite bullish, but as far as I can see, we back in mid June, if you can see my screen here.
Yeah.
I mean, we had a hard rally, like 10% back in June, which caught me off guard. It took me about, I don't know, 2 weeks after that to recover the loss from that. In my book, I've always felt that rally was unwarranted and is probably going to reverse sometime, which is why I've been sort of consistently bearish on the market. These are one of those rare moments where I get to say, "Yeah, I told you so."
Yeah, and to be clear, neither of us operate on predictions. Sometimes we have inclinations, but you never know.
And I don't think I thought it would drop down to 24,000 momentarily, which it did sort of at 6 a.m. this morning, right? But so that massive drop. I mean, I'll be honest. I run a short gamma book, so it did hurt me. I had a 4% drawdown as a result of last night. But I'm not at all worried about that. I think the rally actually caused me more pain. The rally gave me a 6.5% drawdown back in June. This is a small one, and because it's a flash crash, it'll have put vols up. So volatility at the money forward volatility for 1 week has gone up from 29% to 42%. The 10 delta smile is 13% difference between the 10 deltas and the at the monies, and the risk reversals currently pointing downwards by about 10% in the front months, and actually up by 15% in the back months. So we've got good vol finally. So if you've got spare firepower in your margin, now is probably the time to buy back your at the money shorts, resell the wings, and put on any more short options that you want to put on.
You had a bit of a drawdown in that account. How long do you think it'll take you to make that back on average?
Probably about 3 days.
3 days. Okay.
I mean, either vol will stay up, in which case I'll be selling more and more vol as the day goes by, or vol will drop and I'll make all the money back overnight.
Yeah, and that was sort of my next question or my next thought was sort of, okay, we've had this spike in vol, and it's been a big spike. Do we think it's going to stick around? Is it going to stay steady for a few days, or creep up or creep down, or is it going to go right back down slowly to where it was? Who knows? I think it'll be elevated for a few days.
I think people like me are going to jump on it and sell the ass off it. So I think now's the time to sell your vol.
Yeah,
look at the historic vol here. Hang on, where is it? D-vol.
I was just going to say we're coming into the weekend too, and it might kind of taper off as good, but who knows? Who knows?
Well, if you look at the graph here on the far right hand side, I mean, it spiked up to the 1 month vol spiked up to what 54, but they're already down to 43. I mean, get it while it's hot, right?
Yeah, there you go, right on. A couple things. So I'll just mention. So the crash was good for me. I was pointed down. It could have been a lot better. I mean, my P&L went up, but not spectacularly so, because I did have a little bit of some put ratio spread. But as of right now, they're sort of what's ETH at around 1,700 right now? Is it back up there roughly?
Oh, I didn't even notice. To be honest with you, my ETH book is at an all-time high.
Nice.
ETH was entirely unaffected by this.
Well,
I saw a small spike in vol in ETH, but nothing.
Yeah, I mean, last night I did see it went down to like 1,500 or something, a quick little wick down, and then kind of back up 1,650, and then ground up to 1,700 and above. And I think I had some shorts at 1,650 and 1,700. Not a lot. They were part of spreads, so they were partially covered, but a little bit uncovered. But I'm not too worried about those. That equity is probably going to get crawled back, and I'll roll them. At the time, of course, I couldn't roll them. That's something I wanted to talk about. So for anyone new to crypto trading, when we get these big market events, liquidity dries up, everyone disappears. So during a flash crash, don't expect to get filled anywhere. That's normal. And you have to realize too, those bottom wicks are these crazy things. That's not where the market's going to settle. You always look back and you think, oh, if I was joining the spot, I should have bought some calls or bought futures or whatever. But they happen so quickly. And if you're doing something else with options and all of a sudden everything disappears, you have to be pretty quick. But the point is that the dust will usually settle in the following hours to some degree, and then the market makers come back in, you get some liquidity coming back in, and things come into alignment with the mark price, and then you can roll from there if you need to roll. So I wasn't too panicky. Again, I was positioned down. I had negative delta anyway, so I was kind of hoping for a market move down. I just could have made more. But we did get some comments flowing through to us through different channels, and some people were feeling some anxiety. They were newer traders. They had never experienced that before, and they had sold naked puts. And while sometimes we do sell naked puts as part of spreads, we do it very rarely, and we're very careful when we do so. And we always encourage those people, especially if you're newer, you can't monitor the markets, don't do it. Just don't do it. If you want to sell puts, that's fine. You can bet that, but do it as a spread. You do it as a credit spread, a debit spread, where you're going to do any kind of spread to limit your losses, because the market crashes usually a lot faster than it goes up typically. And a lot of times, this happened 11 o'clock last night. I was in bed. I just happened to be, my laptop was on. Otherwise, I would have woke up in the morning and went, oh my gosh, what's happened? That's what happens to most people, right? So if you're there to monitor it, fine. I feel a little bit more confident that can be managed. But when the market moves, you're unable to manage it. If liquidity drives up, you have to wait until things settle back and liquidity comes back in. So that's why you want to be careful when you're selling puts.
So I think the only reason I have a drawdown even at all is because I bought that 1x5 put spread yesterday as part of our video. But trading is a sequence of regrets. You can't get too down about it. You just got to roll with the punches. So what I've done with that put spread is actually I bought it back and then smeared the risk, so that I've bought back the one Bitcoin of puts that was on the 1st of September, and I've smeared that as 10 20 delta puts on 1st of September and next month 8th of September. Down at like 23,000 Bitcoin. So I've bought back one Bitcoin and sold 5, but at a much lower delta. Rolled it as a credit, and I'm actually expecting as soon as the market finds its feet and gets a bit of confidence, the risk reversals will flip, and those puts will become super cheap, and then I'll sell calls against that, and then I'm pulling in money.
Yeah, and we had different books. Of course, I had a lot of short calls as spreads and diagonals, which were great. Those all paid me. They've all been cleared out now. I bought them back for next to nothing. So the move down was a good thing for me. It could have been better, but you always look back and say, darn it. But in all fairness, I was saying that I expected, and the only reason I sold some of those ratios, the puts, I was expecting to get a little deeper into August before a move. But as my friend John Carter says, the market is an equal opportunity dream smasher. So, but it was all good, up. And I know a lot of people are hurting, but I think this is a lesson to you. If you sold naked puts, don't do it.
Yeah.
Especially if you're new. It's just naked calls are a lot easier to manage, and we'll do that. You'll see if you follow us, we do that in a larger percentage of the time. We'll sell ratios and the call side and feel much more comfortable.
Oh yeah, one last thing. I know we want to make this quick, but I was going to say, if you have sold those puts and you're under pressure in terms of margin, so let's say your margin bill, your maintenance margin bill is up to sort of 70+%, then if I were you, what I would do is don't panic, flatten your delta, either by trading futures or selling some opposing calls. Be careful about that, because we might get a bounce yet. I don't think we will, but just flatten the delta and then wait. Just wait. Just wait a week, because time decay cures everything. Don't panic.
Yeah, and that's another thing I will mention too is during that move down, I was selling futures the whole way. I always do that. I had trigger orders put in, and it just I don't think my margin in the worst moment, I don't think my margin went above 40%. So it was
nice.
Quite nice, and hedging works. Hedging works, and we're of course coming out with a hedging course in the next month or two. So wonderful. There should be a lot of action today as part of the fallout. So we'll see prices stabilize and move around. There'll be some opportunities for people who are scalpers. There's going to be all kinds of things going on. Let's see if volatility stays up for the next few weeks, or maybe the end of summer. Maybe we're going to be back to normal higher volatility for months. Who knows? But I think now it's finally nice that the market has shaken loose, and we can get back to the business of making money.
Right on. Yeah.